So at the peak right there, guys, median sale price for all homes was $958,000. And this was in February of this year. All the big banks and some major economic reporting platforms were saying, oh, we expect a 20 to 30% haircut in real estate values by next year. Newsflash, guys, that's already happened. We are at 705 median sale price in July and 710 in August. So the median sale price rose 5,000 between July and August this year.
One of the things we observed is Waterloo is actually one of the only markets that has not been breaching like the Ontario stats yet. So you guys are actually looking more healthy than London or Woodstock or St. Thomas or any of the other markets I study. Waterloo's actually got way healthier stats in terms of the days on market and level of supply. It seems like, you know, things have taken a little bit of a haircut, but honestly, it's not that bad. And even the condo market, you have 5.6% up from last August. Yeah. So, you know, I mean, when I look at these stats, like Waterloo's not bleeding right now at all. Welcome back, everybody, to the Canadian Real Estate Channel. I'm Adam J.D. Martin, and today we're going to be getting the Waterloo market update from Zack Brittain. Zack, let us know what's going on here in Waterloo.
It's been a quiet week coming out of the long weekend, but we're going to cover everything from pretty much the summer, mostly August, talk a little bit about some of the stuff that we've seen in September. We got an investor event, we got an investor hot list, and we got deals we're going to go through as well. So we'll get up into the presentation. Typically, we'd like to start the videos, though, guys, for anybody that wants general information on what we see for the Waterloo region real estate market, we'll hit that first, Adam. If you guys are looking to see what about the investor event or the deals that we're looking at, go to the end of the video. We'll cover some of the initial data on some of those things. And then as well, some of the information if you want to get on our email list for our investor hot list. We're sending out deals and notes on what we see in our market every single week. Every single week, baby. So let's get into it, right? So for our investor event, Adam, you guys, and correct me if I'm wrong, when I was on the podcast, you went to one of the WIBO Tours event way back in the day. That's how you got connected with a bunch of guys down in the London area, right?
Yeah, that's actually how I initially met up with Matt McKeever and Jeff Wybo.
That's
on
hilarious.
One of their in-person events where we toured through some private real estate opportunities and investment opportunities.
Well, I gotta steal their limo tour idea because that's just so awesome. And I think people don't realize like events can actually be kind of fun too. Like, yeah, you may actually learn something and get to know some people, but it can actually be a good time. And during COVID, that's something we got away from. We stopped going to networking events, stopped hosting events. We did one earlier this year with a property that we converted into a legal duplex. Had about 15 to 20 people show up to that and just went through the whole duplex conversion process. This event is at our Waterloo region office. We'll share details for anybody that's interested. We're going to do it on October 6th at 7 p.m. We're going to specifically talk joint ventures, Waterloo region real estate, the types of investments that are there, and then private money, and then start networking. We have a mortgage broker that's going to be there as well if there's specific questions. Myself and my partner, Matt, will be there to discuss specific opportunities or specific scenarios. If any investors are looking to start or looking to add to their portfolio, this is just a really good way to get an understanding of what we're seeing and how to structure some deals. We've really been trying to actively reach out and communicate to everybody that's reaching us from YouTube videos and through our investor hot list. And a lot of people are struggling with the financing of projects, whether it's they need a partner, they don't know how to use private money or B lending, or they've exhausted that option because they have too many properties under their belt and they're running into policy issues with lenders. And they just want to know what the hell is going on in Waterloo region. So we thought, you know what, let's wrap up all the big problems that our network's having, put them into one event. It'll be about 30, 40 minutes of us talking and sharing all of our information, and then another 30, 40 minutes to mingle and ask all the questions. And we like to have a good time, but we want to make sure that we're delivering value. So if these topics are interesting to anybody, whether you're looking specifically in Waterloo region or just in Southern Ontario, we'd be happy to have you down. We'd love to get to meet everybody and see if we can't help them out with some value.
Yeah, I mean, I can't stress the importance of actually getting out and going to meet people face to face. You build deeper relationships, you get access to information that otherwise they might not be sharing. Like, not everybody has a YouTube channel like the Canadian Real Estate channel, right? And not everybody's a content producer. So if you're not out here producing content all the time, it's really hard to get in touch with some of those people that are sharing invaluable strategies and tactics. So I think those events are they're paramount really to success. Like, if you want to succeed faster, if you want to get your goals done faster, the only way to do it is through having an extensive network. So that's a great
and that's
idea.
something we realized that we needed to start building ourselves as well. Was like, during COVID, we found a lot of success in real estate and in our businesses, but we didn't find a lot of success in building our network. And we're like, we like doing that, and we find our network has good benefits from it. One thing we just wanted to do is be very clear on what we want to deliver for the event, right? I feel like I've been to so many, like, you go to conferences or you go to like bigger events and you're like, you're supposed to learn about this. And you're like, well, I just sat through an hour presentation and I like only 5 minutes of it was useful. Nay, guys, like, we are investors ourselves and we are way too practical. We don't want to waste our own time. So if these are topics you're interested in, hit us up. If not, but you want to be updated for future events, then get on our investor hot list or email us at info@phippsbrittain.com. If you want the details for this, we'll email them to you directly and confirm how many seats you'd like to reserve. Unfortunately, we do have limited capacity. We're about 30% already booked right now just from people reaching out to us. So if you do want your spot, the event is the first week of October on the 6th at 7 p.m. Email info@phippsbrittain.com. Myself or Derek will get you guys connected with all the details and reserve your spot. We do expect it to book up by the end of this week. So get on there ASAP. And now, quick and dirty real estate market. So for those of you that are interested in like what we're seeing going on in Waterloo region, next 5 minutes is here for you. If not, you should be emailing us on info@phippsbrittain.com, or you should skip to the back when we're going to be talking about the deals at the end of this video. But Adam, I know you're looking at this stuff for all your deals and all the markets you're in and just kind of your overall strategy. So I will preface this by saying I am not an economist. I am not some sort of government political expert. This is merely my interpretation of what I see going on. Our current real estate market is controlled by inflation, interest rates, and then the mix between demand and supply kind of follow afterwards. Inflation's still fairly strong, so consensus is interest rates will continue to rise in this environment. The worst thing we can do as an economy is let inflation get out of hand, which arguably we already have. But to control that, we will be controlling interest rates to choke out spending and lending. So expect interest rates to come up. Adam, what happens when interest rates rise? There is more demand or less demand for financing.
Yeah, I mean, there's going to be less demand, guys.
Right? It's more expensive to get money, so there's going to be less people that want it or less people that can afford it. So if that happens, then we do expect demand for purchases to cool. Some investors will sit on the sidelines a little bit longer. Some buyers will wait until mortgages become more affordable for them. And in exchange, if there's less people demanding to buy, then we could see supply start to build back up. Properties aren't getting bought as quickly. They're sitting on the market a little bit longer. It takes a little bit of a while, but we'll see supply start to creep up. If there's more supply, then buyers have more choice. If buyers have more choice, properties don't sell as quickly, and then they sell for the same or for less money. So these are scenarios that we can see playing out, and specifically in Waterloo region. We're going to get into some current stats right after this, but these are the things that we're looking at on kind of a bigger scale to guide our decisions and our advice for our specific clients, depending on their situation. Overall, though, for experienced investors out there, there's money to be made in any type of market. You know this. Just operate with a margin of safety and understand what the future is likely to hold. Make your moves accordingly. That's what we're doing. We're active in this market right now.
Yeah, I think those are some great points, and it does help as well to understand the macroeconomic climate. I mean, the federal bank just met today in the United States of America, and they gave their update on inflation there. Yep. We are not alone in our position on inflation, and being one of our largest trade partners, that could pose other macroeconomic influences on the state of our real estate markets. Of course, everybody in our markets, if we're investors, we're either renting or we're flipping, and the total money supply and level of demand across the whole market is important to understand as well. So yeah, great points, man.
Yeah. And this is just like general concept, guys. We use this to guide our decision-making and our planning process. By no means does one factor make us move or not move on a property or advise a client. Like, you have to take all these into consideration, but it is important to know them. So things specifically for people that are considering or are active in our market right now. How long does it take to sell or buy property? What's the inventory like? And what are prices really like? So we're going to go through the actual stats that I look at on pretty much a weekly basis, but that we report on in our videos on a monthly basis. So let's tab over to that right now. So guys, this is Infosparks. This takes all the data from the Ipsos system. So anything, this is on market, this is on the MLS system. This is a really good guide because the MLS is the bulk of the volume and the value of real estate that's being traded. So just as like an initial indicator on what we're seeing, this is also, if you guys get our monthly emails or you're on our Instagram and you get our updates every month, this is what the Waterloo Region Association reports on as well. And other real estate boards that are on this data platform use this as well. So what we have here is the median sale price for all property values in Waterloo Region, okay? So at the peak right there, guys, median sale price for all homes was $958,000, and this was in February of this year. A lot of reports came out actually last week and the week before, Adam, was all the big banks and some major economic reporting platforms were saying, oh, we expect a 20 to 30% haircut in real estate values by next year. Newsflash, guys, that's already happened. We are at 705 median sale price in July and 710 in August. So the median sale price rose 5,000 between July and August this year. I'm not reading into that much. That just kind of signals to me that the slide has stopped. But I mean, we're dropping 250,000 in sale price in the last 6 months, right? So a lot of our investors see that as a signal. Okay, I'm still getting decent financing. I can lock in a price that's $250K cheaper. My price per door or my purchase price and my overall cost to do a flip or a duplex conversion has dropped dramatically. Okay, I can start looking at deals again. So we had a lot of investors pull the trigger on some stuff in July and August to lock in, what were still some really great rates before interest rates rose in September. So that was a scenario where some investors could really make some decent cash flow on some existing multi-units. So they scooped them up. Well done. Now, one thing I do want to touch on right here is let's go single family homes. Your single family homes, they were just over 1.1 million in February. Those went down again in August. They went down from 790 in July to 780 in August of this year. So detached prices are where we've seen the majority of opportunity because there's a lot more variance in single family homes, condition, location, features. So there's a lot more opportunity for discrepancies. But what we would expect is distressed sellers will continue to bring properties to market. They have no choice. That's where you're going to see more deals. We're not seeing people fire sale their houses in Waterloo Region, Adam. There's not like 20% of the market that can't afford their mortgage and they're putting their home up on the market. That's not happening yet. I don't suspect that to happen, as the majority of people who recently purchased property purchased under a stress test to account for this type of thing. But again, if things do get really bad, then that's something that, we'd have to look out for. But I don't suspect that to happen in Waterloo Region in the near future. But single family homes took a very significant dip, 1.1 million to 780,000. That's a big drop. So we smell opportunity, but we caution, just operate with a margin of safety for the next little bit. Another thing we're going to look at here is days on market. We've talked about this on this channel before, guys. Days on market is super tricky to understand because of how it's recorded. Just know a lot of people cancel their listings and relist the property to sell it. It could be on and off the market statistically for 2-3 months and then sell. But since that new listing was only on the market for 2-3 weeks, the days on market are only recorded as 2-3 weeks. So if you're planning on selling a property, let's say a single family home or a condo or maybe even a duplex, expect it to take 30 to 60 days to sell. If you're selling a multi-unit, expect it to take at least 30 to 60 days to sell. That is much, much more representative of what's actually happening in our real estate market. Properties are taking a little bit longer to sell. And there are also properties that have been sitting on the market, Adam, for anywhere from 60 to 120 days because they listed, back in the spring when prices were adjusting. So those properties are still on market. They could be an opportunity to offer conditional, offer significantly under asking price. Those are opportunities that we're looking at for a lot of single family buyers, especially for primary residents or house hackers. We see opportunity in those types of deals because, if they're still in the market after 3-4 months, they may be unrealistic on price, but they're still motivated. So maybe there's a deal to be had there some way or another. Last thing that I want to touch on, guys, or second last thing, is months of supply. So if you're looking at any market, months of supply is an indication of how many deals there really are out there and should reflect how competitive a market is. Less than 2 months of supply, that's a tight market. Above 2 months of supply, you have a little bit more flexibility, a little bit more options as a buyer. We've had under 2 months of supply pretty much ever since I've been in the business. Last 6 years, right? This is the only time it really crept up. 2.1 months in May of 2019, right? Our months of supply was building up from January, February, March of this year, plateaued around June, July, and then came back down in August. Experienced real estate investors or movers or buyers and sellers, they will know August is actually traditionally one of those slowest months in Southern Ontario. Nobody's moving in August because anybody that wants to move in the summer lists their place in the spring, closes in the summer, fixes it up, moves in, kids go back to school. End of August, beginning of September is dead. No new listings. People are pulling their listings to list them in the fall instead. Like they're deciding to put it back up on the market next year because they didn't get what they want this year. That happens a lot in August. So I expect even though inventory dipped between July and August of this year, that will come back up by the end of September and into October. And if the market does really slow because interest rates continue to rise, expect inventory to slowly stack up. So track the inventory market or numbers in our market or in the markets you're looking at, guys. That'll give you an indication how competitive a market really is.
Yeah, I think those are some great insights. And like to give context of this, just as an anecdote from my end, like we didn't send a single piece of marketing in August because we understand that it is seasonally one of the worst months that you could be looking to purchase. But in saying that, we actually stacked a lot of gunpowder ready now for September, October, which we view as some of the best months for our business model to really take action. And I think a lot of other investors would benefit from doing similar strategies or tactics. And one of the things we observed, because I get a market update every Monday on all the core markets in Ontario, at least Southwestern Ontario, and Waterloo is one of them. And one of the things we observed is Waterloo is actually one of the only markets that has not been breaching like the Ontario stats yet. So you guys are actually looking more healthy than London or Woodstock or St. Thomas or any of the other markets I study. Waterloo's actually got way healthier stats in terms of the days on market and level of supply.
Yep. And in terms of healthiest stats, I'm like how competitive the market is and how strong it's holding prices or how strong it's looking to maintain prices, I'm assuming.
Yeah. So perhaps not the most opportune time right now for buying, but I think that will turn around again, like we're saying, with a bit of the seasonality. And even just comparing August numbers, like, you know, I've got a chart up here from Waterloo Region Association of Realtors comparing single families, townhouses, condos, semis, and all properties just August over the last few years. So 2020 to 22. And it seems like, you know, things have taken a little bit of a haircut, but honestly, it's not that bad. And even the condo market, you have 5.6% up from last August.
Yeah.
So, you know, I mean, when I look at these stats, like Waterloo's not bleeding right now at all.
Yeah, you're pretty much at where we're at last year this time. And that's kind of maintained. That was the story around end of June, beginning of July this year. And that's kind of been maintained throughout the summer. Now, as interest rates have bumped again, and as they're expected to bump again, and inflation hasn't cooled yet, you know, that may signal to some people, hey, we got to pump the brakes. Hey, debt's getting more expensive. Hey, we're going to stay out of the market a little bit longer. So we're cautioning, especially anybody that we've had conversations with from last week of August to like now, hey guys, why don't we just see what's going to come to market for the next week or two? Unless you need to move right now. And don't get me wrong, there's always going to be people that need to move in any market. If you need to move in any market, then it's not about picking which market you're investing in. It's about getting the deal done because you need it. That's a lot for your primary residence and stuff. So for people making a primary residence move, okay, learn this market, whether it's with us or anybody else, learn your market so you know what a good deal is and a bad deal is, and then identify what the best opportunities that fit your criteria are, and then offer on the best deals that fit that criteria. But if you're picking and choosing the right time to invest, look, a steal comes up right now, great. Pick that up. It's a steal. Steals are steals. I'll take them. But if you have a little bit more flexibility, or if you're not seeing anything that really tickles your fancy, okay, give yourself a little bit more of a margin of safety, see what the end of September looks like, and then make your plan to scoop something up by the end of the year. October, November, December, January are always great months to pick up an investment property. Typically, that's when we make the majority of our purchases. Your construction businesses are a little bit slower too, so you may be able to find contractors or handyman off season. Maybe a good time to do maintenance on your current properties to prep to refinance them or to sell them if that's what you're going to be doing end of this year, beginning of next year. We're looking at our end of year plan, and then come November, we're starting next year's plan for our portfolio and for our investors. right? So the last one we'll talk about real quick before we go on to some of the deals there, Adam, is just the percent of list price that properties are actually selling for. And so, I mean, common theme in a lot of these are like the price graph. Prices got really high, and then it's coming down, right? So up here was the peak of February when properties were selling for 30% above asking price on average, right? Not sustainable. It's crazy. But we've seen that come down, and now they're typically selling about 98%, 98.6%. So take 1% off the original asking price. That's probably what it's selling for on average. Yes, we still do get multiple offers on some deals, but typically properties are taking anywhere from 2 to 6 weeks to sell if they're priced well. Probably 50-50, they take a conditional offer or they take a cash offer with no conditions. And you're expecting the property to likely sell around what it sells or what it's listing for. What we've been telling our sellers is, hey, look, in an environment in which buyers are expecting prices to come down, pricing your property accurately the first time will dramatically improve your chances of actually selling it for the price you want it for. If you're pricing your properties, if you're listing a property, whether it's an investment property or a primary residence, and your intentions are to sell this, like you have to sell this, then I would caution people on giving themselves too much of a margin to negotiate, right? You see the comparable sales, you adjust for the condition and the features that you have based on the ones that have recently sold and the ones that are on the market. But I'm looking at the ones that are on the market being like, how am I going to convince a buyer to come buy this one over the 10 others that are on the same block? And offering a fair assessment of the value, and that means being critical of your own property, is really, really important. Because here's what happens, Adam. If you overlist your property, you're either going to get crappy offers, if you're lucky, or you'll get a bunch of showings and no offers because people see value in other properties. And if you're getting a bunch of showing and no offers, that means you are overpriced. And that means you're going to have to reduce your price. And that means that if you're reducing your price in a few weeks, you may be a few weeks behind your market's pricing strategies. It's just, you get chasing yourself to the bottom. So just a little food for thought for anybody thinking about selling and listing properties. Pricing it appropriately is so much more important now than 2 years ago when everything was selling regardless.
Yeah, that's a fantastic point. And it will also just help you to avoid some of the pitfalls of having it sit too long. Like I always find if I'm looking at a property and I'm staring at it for too long, like what could be wrong with this property is the natural question that everybody starts running through their head.
Whether you say it out loud or actually in your own head or not, you're like, it's been on the market for like 90 days. Like, how's there that? There's not that many other people that have missed something. Like I must be missing something here. It could just be a perfectly normal property that was just 30,000 overlisted.
Yeah.
But the ideas start growing in the head and they're like, nah, I'll skip that one.
Yep.
Those are some of the best deals that we've picked up. Properties that just listed at a great price or properties that have been sitting on the market at a crap price.
Yeah.
Sometimes it's an uneducated seller, uneducated agent, unrealistic. But at the same time, if there aren't great opportunities in your market, that's kind of the next thing I'm looking at. Is, okay, what if everybody else passed on? Is there something they're missing or something that I can do they can't? But for now, I think there's more than enough opportunities coming to market off and on. Outside of the multi-unit space, the multi-unit space in our market hasn't adjusted yet. We talked about that in other videos, guys, is if you're looking for multi-units in Waterloo region right now, the number one complaint I'm getting from everybody that's reaching out to us and our active clients is, well, the rents suck. Yeah, the rents suck. You're getting 5 years ago rental rates at today's price. And investors are more sticky on price. They want the best possible price for their listing, or else they're just not going to sell it, right? And so they can refinance it, put a second on it, take a private, or just not sell it and let it continue to cash flow, because at the current rents they're getting, even though they're garbage for current prices, they're probably still making money every month. So they're not as motivated to sell this house or this multi-unit at a discount. So the multi-unit deals, far and few good ones in between, but like we sold 3 duplexes in August that were great deals. Cash flow positive properties that were turnkey, ready to rock and roll. So they are still out there. We see a lot more opportunity in the duplex conversions and maybe a few multi-unit burrs, and that's what we'll get into here now. So Adam, on that note, he mentioned earlier, guys, he's on an email list to get monthly updates on the real estate markets in Southern Ontario, right? One quick email, 10 minutes, once a month, boom. He knows kind of almost the basics of every little market he's involved in. We do this every week for Waterloo region specific investors. So if you are curious about us and what types of deals we look at as investors, okay, or you're also curious in what's happening in Waterloo region in terms of investment properties, get on our investor hot list. There's a link in the description. You can go to phippsbrittainrealestate.com/contact right now. There'll be links in all the descriptions, all the videos we've posted to the Canadian Real Estate channel. And we email every single week. Hey, here's a quick little tidbit about what we're seeing in terms of some data. Also, here's a handful of deals that we think are good deals and a handful of deals that have sold that were good deals. So you can see the method to our madness and start understanding our market kind of at the top level down. So for anybody that's interested, go check that out. We've had great success with people reaching out, actively buying deals or learning our market slowly, because you're probably analyzing tons of different markets all over Southern Ontario. This is a really good way to accelerate that growth. Furthermore, Adam, we started doing some live streams on our YouTube channel and on Instagram Live. So if people have active deals they're curious about, or you want to compare deals that you've already purchased to ones that you're considering buying, I'll be on YouTube anywhere from 30 to 60 minutes at least once a week to go through our investor hot list and to talk to anybody that wants a free consultation. Like, this is just free Zack time, guys. This is free advice. This is free time. If you're interested in investing in Waterloo region or you want to learn more about what we see, this is where you got to be.
Yeah, that's an amazing resource, man. I'm looking for a property right now up north, near a huge piece of vacant land I have. And let me tell you that this is not an option up there. And it's really too bad, because I'm looking at certain properties that maybe I don't have time to get to. Right. And this is the same, like if somebody's right now watching this, if you're in Toronto and you're thinking about buying some Waterloo deals, like, I get it, man. It's a struggle to drive up the 401 every day to come look at these properties.
Mm-hmm.
Something like this is a great resource when you can tap in and just say, hey, Zack, what's holding you back on some of these, XYZ property, and just get a live Q&A on some of the different insights Zack would have as a local expert, right?
Mm-hmm.
Because it's so hard to know the different streets, the different neighborhoods, the different areas. And like, hey, Zack, I'm looking at this property on 123 Main Street. And you're like, oh boy, that's actually the wrong side of the tracks, right? You don't want to be buying there.
Yeah. Full disclosure, there's not a ton of areas that we wouldn't invest in. Everything's got a price, baby, as an investor. But it's a really good point. And to take it a step further, like, Adam's looking for property up north. Like, you can, but it's a colossal pain in the ass to get in the car, go take a look at the property if you don't even have an idea if it's going to be even close to a big fit. So one thing that we do a lot of is, like, investor hot list is a great starting point for any of you out there that are like, okay, I've already identified Waterloo region. I kind of have an idea of what types of deals. I want to know what the perfect type of deal that fits me is, and I want to start shopping. Okay, that's when we can start talking to them as clients and start understanding more specifically about your goals and the types of property that fit. At that point, we can go out and preview properties for our clients. Like, we probably look at them anyway, but you guys are like, our clients are at work. They got shit to do. They have families. They can't burn 3 hours a night from their life to drive down to go look at 1 or 2 properties a night. Okay, no problem. Me and Matt will go look at it during the day, shoot them a quick personal text or hop on a quick call on their break and say, yeah, no, this one's a dud. Don't waste your time. Because either we've already looked at it, or we know the property, or we're going to go look at it and it takes us 10 minutes instead of you 3 hours. And I can do more in 10 minutes than most people could do in those 3 hours in terms of figuring out if it's a good deal or not. So leverage that. So that's an option on the table. For all of our friends in the GTA or beyond, you need somebody to shop you deals, baby. Come talk to us. There we go. phippsbrittainrealestate.com/contact. Link in the description. We can get that, guys. Okay. Deals. Adam, we're going to fire through these. You can ask me any questions if you want. But these are deals that are active on the market right now. We have one off market. We sent it the investor hot list. I went through it the other day. Full disclosure, it needs work. This is an off market legal fourplex, 2 3-bedroom units, 2 bachelor units, asking $950, vacant possession. All the tenants are gone, right? We got parking for 7. There's a triple car detached garage and a shed in the back. The location and the lot are money, over 50 frontage, over 110 depth, lots of purpose-built multi-units here, lots of brand new builds, a lot of infill projects, because this is an area where there's lots of old homes on big lots. They'll knock them down, build semi-detached duplexes, knock them down, build a fourplex. This is an existing purpose-built legal fourplex, totally vacant. You can buy it for $950. You can put your $250 into it. If you're at, you're probably bringing in about $7,500 a month in gross rent. At like a 5 cap rate, you're at about 1.3, 1.4 valuation. But if you keep it as is, you're cash flowing without refinancing it. If you're in it for, your 1.2 million, let's call it, and you don't refi it, you're cash flowing anywhere from about 2,000 to 2,500 a month as is. So cash flow positive deal. If you don't refinance it, you're almost 6.5 cap. If you do refi it, or you do need to refi based on a 5 cap, which is decent for our market, you're looking at about 1.4 valuation on that, which is very doable for a turnkey fourplex.
Guys, parking, purpose built, vacant possession, these things are literally what dreams are made of. Like, it's one thing to go buy kind of a crap building and, you know, it's been hacked together, and that's fine. It actually is. But I'm telling you right now, I've had 100% better experience with purpose built stuff that has parking, better tenants, better experience, less management. And of course, you get those better rents.
Well, and don't you always have that feeling when you buy the purpose built, you're like, it's a little more money than I want to pay for it. But then you have it and you're like, this is great.
worth literally every penny.
Yeah.
Honestly, if you want to scale your business, it's very, very difficult, or at least it's mentally taxing to buy things that aren't set up like this, purpose built, ready to go. It's so much easier to maintain, so much easier to renovate. They thought about the layouts better. You're just simply going to get higher quality tenants. And these are things that I learned from Casey Wong, a star on this page, then I implemented. And I'm telling you, you need to be buying more assets like that.
Yeah. So this one's off market. We're not bringing it to market just yet. So if anybody wants dibs on it beforehand, we sent it out the investor hot list. I know it's a quiet time of the year. All you guys got the kids going back to school and stuff, but this deal is here and it is ready to rock. We got a couple of duplex conversion deals and then a house hack. The house hacks are real, Adam. They are coming back. The duplex conversions also very real. I had a Lord of the Rings meme and one of the videos we made a couple months ago because the Return of the King of Kitchener duplex conversion deals are back. The numbers just worked so much better after having a few months where they were really tight. This is a brick build detached on a 54 by 124 lot for $525. I went through it the other day, 2 beds up, 1 bed down, great ceiling height and great natural light in the basement. Parking's already set up. Location is super rentable. Price point, I like $525 for a detached house. Sign me up. They're doing offers actually today, I think. So by the time this is posted, guys, this one's gone. But like this, we would have already shared on our investor hot list last week. I sent this one out. Get on it, guys. But the location, the price, or money. I can be all in this for way less than I can be in this for less than $650, $675 for a legal duplex that's making me $4,100 a month. And it's got a big enough lot that I could do an addition or a tiny home in the future, maybe. Who knows? I like that. I like that. Next. $575, all brick build, detached bungalow, 1-car garage. Parking, we would need to do a little bit of love to just to make it more convenient. But little tidbit, you only need 2 parking spots in Kitchener to do a legal duplex, and they can be in tandem, which means they can be one here, one here. They don't have to be side by side. So this already legal. Perfect. 55 by 132 lot. Love the frontage. Love the depth. I smell tiny home. Location is very rentable. Already ready to rock and roll, can be legally duplex. The price is right at the $575 because you're going to get a 3-bedroom and a 2-bedroom, and you're getting a bigger lot. Okay. 3-bedroom and 2-bedroom is going to yield you probably close to $4,500 a month in rent and will likely appreciate, and it'll likely appeal to more people if you ever do turn around and sell it because the upstairs unit would be big enough for a live-in. So let's say an investor or a first-time buyer wants their first investment property, which is going to get more common in our market, because people would be more inclined to buy a duplex to live in for a few years and get a mortgage helper than go buy a townhouse and have that for 10 years. So a little bit more rent, a little bit higher purchase price. Come buy this one now. Lay up duplex conversion, guys. And house hack. This one's 74 Strathcona. This is a much higher price point. I think you could probably get a little under this at the 719. Properties at the low 7s, I find are really juicy for house hacks because they're typically a little more expensive than I'd want to pay for a duplex conversion, straight up as an investor. But if I want a property to live in, there's fantastic homes in the 700s right now. You know, these aren't fancy. You know, you're not getting the stone countertops. I'm not getting the chandeliers. I'm not getting the double car detached garage or the big pool in the backyard. But if I'm a first-time buyer or I want to get into my first investment property, a house hack is an amazing option. So what I'm thinking for, and I shared one like this a couple months ago, what I'm thinking for something like this is a detached that's in move-in ready condition. It's got a finished basement. This is what I'm looking for. This is 3 bed up, 1 bed down, 2 full baths already. The condition is move-in ready. It's on a quiet court. You got extra parking, and the basement's already finished with a little kitchenette. Bonus. So you and your partner, your girlfriend, your boyfriend, your partner are going to move into the upstairs, or you and some of your friends from work or from college are going to move in and rent out the upstairs. And then you're going to rent out 1 or 2 of the rooms in the basement. They got their own bathroom and little kitchen down there set up so they don't have to disturb you upstairs, but maybe you don't have the money to convert it into a legal duplex. So you're renting out the rooms. You're making a little bit extra money, helping you pay down the mortgage. Once you can afford it, That's when you can convert the basement into your legal duplex and refinance it. At that time, you can decide you want to stay and live there, Adam, or do we take the refinance money, go do it again, or go buy a primary residence? This is a fantastic stepping stone for a few different types of people. If you are a first-time buyer and you want to do a little bit of sweat equity, you're a first-time buyer and you want to get into investment property, but you can't afford a legal duplex, or you can't afford to go do the legal duplexing on a single-family home right away. Those 2 or 3 types of buyers, this is a fantastic fit. The last type of buyer this is a good fit for is somebody who wants a single-family home that you can leverage to move into another home later. So stay here, don't rent it out, no problem. If you can afford that, great. But you can legally duplex this when you move out instead of selling the place. Now, boom, you have your first investment property. So these are all ways that you could approach a property like this. I'm looking for something that's 6, maybe 7 out of 10 condition, a B plus neighborhood, 3 bedrooms upstairs with a finished basement, and has the features to be legally duplex eventually. I love those for house hacks in our market right now.
Yeah, great points and great locations. I've just been quickly typing these in as you're presenting. And I mean, all of these have been just like right off the main vein highways and super accessible to all types of employment and, major employers, airport, everything's right there.
Yeah,
so
we're looking at all these. And sorry, that's a really good point, Adam. Thanks for bringing that up. When we're making these suggestions, I'm already thinking about that before I suggest the location, right? Sure, I'd be willing to pay a little bit of a premium for a better location, whether it's maybe a nicer neighborhood or a court or a dead-end street within a nicer neighborhood. Okay. But if I'm looking for the rental potential, the highest and best use is how much could I rent this out for? So if I can rent it out for more money, I refinance it for more money, I cash flow better, and I sell it for more money. Okay, it's going to be a combination between convenience and privacy. Okay, am I not on a major road? Perfect. Am I just off the major road so they can walk to the bus station or the ion rail? Okay, great. Are they walking bus distance, biking distance, all the amenities they need? Great. All these properties check those boxes off, guys. And that's what we look for rentals and for investment properties first and foremost. I can't pick up the house and move it. I can, just doesn't make sense financially. So those were 4 deals that we liked. Off-market deals still available. One of these is taking offers right now. The other 2 are still available. And if you guys do want to get on top of this, the investor hot list is the place to be. If you're ready to actively look, email info@phippsbrittain.com, set up an intro call with myself or my partner, Matt Phipps. That way we can, get you in front of listings a lot quicker than you just casually looking on our investor hot list. And then just to kind of finalize everything here, Adam, why aren't you on the investor hot list? Look at me like Captain Phillips in the movie. Get on the investor hot list. It is free, and I guarantee you will learn something. Second, fall investor event, Adam. Events are back. COVID's not gone, but we can do events, guys, and we're ready to mingle. Fall investor event, October 6th, 7 p.m. Email info@phippsbrittain.com. It is in Waterloo. We're going to have a great time, and you guys are going to learn about JVs, private money, the Waterloo region real estate market, where we're seeing deals. We have one of our mortgage brokers on tap. He's going to be hanging out, answering any questions you guys have afterwards. And at the very least, you get to pick our brain on what we're seeing and what we're planning for the rest of this year. So that is the Waterloo region update for this month, my friend. If you guys need to get connected, email us. All of our contact information links are in the description.
awesome. Thanks again, Zach. Really appreciate you coming on the Canadian Real Estate channel. And you guys, you know what to do. Go subscribe, like the video, and make sure that you get notifications going so you can hear all of these updates here on the channel. Thanks again, Zach.
Yeah, appreciate it, Adam. Thanks, guys. See you soon.
Cheers.